In this video, I will do the technical analysis of S&P 500 index for the week commencing from January 24th, 2022. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we'll be able to get the most accurate results here. So first I'm going to begin with the weekly chart. Okay, so this is the weekly chart. Weekly chart means one candle represents 1 week. So one candle means 1 week, not 1 day, 1 hour. One candle means 1 week. Okay. So if you look into the last candle, okay, this is a super bearish candle, a very heavy bearish candle, okay, on the weekly chart. And you can see that the open of this candle was 4632, okay, just below our this this strong support, but now it is going to act as resistance, and then it holded and means it closed just above our support, okay, which was 4396, 4395. Okay, so you can see that it closed above 4395. That is our strong support. So from 4632 to 4395. So this is a super bearish candle. The formation of this kind of bearish candle, okay, it means that there are very heavy bearish sentiments in the market. Okay, now if you see there's the previous weekly candle, okay, the previous weekly candle, it was a hollow red candle, okay, wherein the interpretation of this hollow red candle was that market was supposed to move up, okay, in this week, but means it was not supposed to come down, rather it was supposed to move up. Anyways, let's do the technical analysis. So before I do the technical analysis, I'm going to write down the support and resistances here. Okay, so support and resistance levels here, and for S&P 500. Okay, so we have this resistance here at 4790. It is at 4790. Then we have another resistance at 4740. 4740. See the importance of this 4740. I have described many times in my previous technical analysis also. Okay, so you can see 1, 2, 3. Okay, means the market was moving around this 4740. Now then another resistance at we have this one at 4690, 4, 6, then 9, 0. Then this one, okay, 4633, or you can say 4635, 4635. Then we have 4573 or 4575, you can say 4575. Then we have 4528 or 4527, 4527. Then we have 4460, 4460, and then finally this support at 4395, 4395. Other than that, we have another support here, okay, if in case the market, if it comes down, the final support here at 4290, 4290. Okay, fair enough. Okay, so these are the support and resistances for the market. Now let's do the technical analysis. So first comes the Bollinger Bands. So if you look into this, the Bollinger Bands, this is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market is in between lower band and the median, which means market is bearish. Okay. Then comes the moving averages. These are the moving averages. Market has closed below all of the moving averages, which means market is bearish but there is clearly a fan out in the moving averages. There is no crossover in the moving averages. This itself says that there is still some bullish movement in means there is some still bullish momentum in the market. So until and unless you see two consecutive these candles closing below all of these moving averages, or whenever there is this the crossover of the moving averages. See, this crossover is not seen in the market for almost 1.5 years. Okay, so it's like always market was going up. It was moving up, which is why we are calling it as bubble or super bubble. So this is what I mentioned in the technical analysis of the first week of January. So I told you that market, that S&P 500 and Dow. Okay, this indices means overall the market is in bubble. So year 2022 is the year of bubble. Okay. Now comes the Ichimoku, because market is moving above Ichimoku, okay, which means market is bullish. Now, if we look into some other technical indicators, then we have MACD. MACD, you can clearly see, very heavy divergence here, which means, okay, it is bearish. Then comes the stock RSI. Stock RSI is clearly bearish. Okay, then comes divergence. Divergence is normal. Momentum. Okay, momentum is now building up in favor of bears, in favor of bears. So these all of these indicators are saying market is bearish. Okay, so last week also indicators were saying market is bearish. Anyways, so the only indicator that is saying that market is bullish is the Ichimoku, because market is trading above Ichimoku. Okay, and partially the moving averages. Otherwise, the market is clearly bearish. Okay. Now, what is going to happen, or what will happen in the next week, okay, especially on Monday and Tuesday, so that we are going to discuss on the daily chart. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Daily chart means one candle represents one day. One candle means one day, not 1 hour, 1 week. One candle means one day. So first, the interpretation of this, the last candle, it's a heavy bearish candle, which means that there are bearish sentiments in the market. Okay, as simple as that. Now, the technical analysis. So first comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed below the lower band and below the median, which means market is bearish, but now market is going to retrace. Okay. Then comes the moving averages. There is clearly a crossover in the moving averages. Okay, and market has closed below the moving averages. Okay, 2 3 4 times. Okay, which means market is clearly bearish through moving averages, clearly bearish. Okay. Next comes the Ichimoku, because market has closed below the Ichimoku. Okay, below the Ichimoku, which means market is bearish. Then comes other technical indicators. So if you see here, first comes the MACD. So if you see MACD, there is very heavy divergence in MACD. It is saying market is bearish, but it is also saying that there is very heavy divergence, and this divergence needs to be minimized. Okay. Now comes the stock RSI. Stock RSI is absolute, means almost absolute zero. Okay, means the K channel and the D channel, which means that it is heavily bearish, but it also means that market is about to retrace. Then comes the divergence. Divergence is normal, not a problem. Then comes the momentum. So momentum is almost 81, which is supporting the bear trend. Okay. See, through all of the technical indicators, it is very visible that market is clearly bearish, Okay, but other than, see what we need to see here is, okay, so let's see what is going to happen on Monday and Tuesday. This market, it closed just above our support. Okay, this is strong support of 4395. Okay, this is our 4395. Okay, this closed just above our strong support of 4395, which means there are very heavy chances it is going to retrace. Okay, then comes the next support 4290. Okay, just in case if market comes down, because there are very heavy bearish sentiments. okay, not immediately, but after retrace, okay, it may come down. So we have, this is the support 4395, and then I have already, mentioned these the support and resistances. So what we are looking for here is particularly 4527, 4527. Sorry, this is 4. Okay, 4527. Thereafter we are looking for this one, 4630, 4630. Okay, and then usual 4690 and 4740, 4740. Okay, so these are the support and resistances we are looking for. Okay guys, so these are the support and resistances. Okay, means very important support and resistances. So on Monday there are 99% chances, okay, that write it down here, that on Monday it is going to retrace. Monday rebound. Okay, is going to rebound on Monday. So this is clear that on Monday, okay, it is going to rebound. Because the technicals, okay, because market has already overshoot the technicals. This is the reason why it is going to rebound, as simple as that. Okay, so there are so there is not just one technical, okay, means one technical indicator, but there are three technical indicators. So market has already overshoot these three technical indicators. So in order to cover, okay, that part, market is going to rebound on Monday. Okay, now when the market rebounds, first it is going to it will be easily able to, cross 4661. That's not a problem. So this part, okay, so market is going to first meet this this resistance here, 4527. Okay, and if you see that there is also a confluence zone, okay, because of this and because of this, so market is going to first hit this 4527. Currently it is closed at 4397. So on Monday it is expected to hit 4527. Okay, and see, because this retrace that I'm expecting on Monday, okay, it will be a heavy rebound, a heavy retrace. Okay, so there are very heavy chances that it will hit 4527. Now after hitting this, after hitting 4527, then it may take a break. Okay, and if not, then it will further move up towards, this resistance, and this resistance is at 4575. So when it hits 4575, okay, then there are chances. Yes, 4575 is what, okay, yes, we can expect that market will halt here around 4575. So this 4575, write it down, 4575. Okay, so this 4575, market will retrace, market will hit around this 4575, and then only it can come down. Okay, and if somehow, if for some reason, if it further moves up, then in that case it is going to hit this 4630. Okay, when it hits this 4630, then it will come down. Okay, as I mentioned here. So see, the thing is that on Monday market is going to rebound, and if you see that on Monday, if there is a very very heavy bull candle, then expect that on Tuesday also market will first shoot up before actually coming down, which means that on Monday and Tuesday you can expect the market to recover these losses. Means not all of the losses, but some of the losses. So you can expect this 4575, see, 4527 or 4575. Okay, means around 4575 it is expected that market will retrace up to 4575. Now the thing is that okay, see, this thing is what I'm telling you for last 3 weeks since the beginning of this year, that because this year 2022, this is the year of bubble. Okay, and this bubble will burst. So I told you that either in the last week of January, or in the last leg of this quarter one, the market is expected to sorry, this bubble is expected to burst. Okay, so when this bubble will burst, okay, everything will come down. So now before coming down, market will first retrace. So the idea is that you should always be ready. So it is ready to sell on rebound. Okay, so ready to sell on rebound. Okay, so this is basically the idea. So rebound basically means the lower high. Okay, it is not higher low, but it is lower high. Okay, so this is what you should be aware of, that because the bubble, okay, it is expected to burst. And as of now, okay, I will say that avoid buying. Okay, means if you want to buy intraday, if you want to buy for the short term means 1 day or 2 days, okay, that is fine, that you can buy, because you can always buy on retrace, not a problem. But if you want to hold, okay, for a month, for a year, then as of now, okay, do not do that, because market is in the bubble and this bubble can burst anytime. Okay, so you can see some this trailer here, okay, that everything was coming down heavily. So let it rebound, okay, and whenever you see market is struggling, okay, either at this point or this point or this point, okay, that is the time you are going to sell, because then the market will further come down. Okay, so guys, I have given the link to my Discord spreadsheet in the description of the video, so you can take a look. And also I have given the link to my options trading profit strategies program in the description, so you are welcome to join. So guys, this was my technical analysis for the week commencing from January 24, 2022 for S&P 500 index.